Hello traders, Gary Wagner here. It is Monday, the last day of October the 31st, approximately 10 o'clock in Honolulu, Hawaii, and this is the daily report for gold and silver. Traders, we have another day. We are ending this month on a sharply lower precious metals markets, a sharply lower stock market, and a sharply higher dollar. It is that strong dollar and some global uncertainty right now which has been prompting the move that we are witnessing. The first thing that I do want to take a look at to show you the incredible strength of this dollar is our daily dollar chart. It is in standard candlestick format, and as you can see, the kind of move that we witnessed today is really unprecedented in terms of its dynamic range. When we take a look at the fact that it opened roughly around 75.20, 75.30 in that area and is at 76.67 currently, when you take a look at the size, just the size of this candle, meaning the range, the open to the close, and compare that to any of these past moves over the last few months, and you will see that we have a dollar that is a lot stronger than we have seen in terms of a one-day move in the market. Now, what has that done? We have sharply lower gold trading off about $23, $22, currently trading at 17.1682. That is cash, and then 17.8, and that is basis the COMEX December contract. We did pull profits, very, very small profits, but we did have our stop at 1709, got in at 1703, effectively got us out with a very, very small gain. At the same time, we still have a 1695 put. That option, we're going to recommend that we just hold on to that and see if this market wants to sell off further. In terms of the silver market, we have some very, very good profits. I will be making a decision depending on how it trades in the afternoon session as to whether or not we want to pull profits, because we have fairly sizable profits in the silver market currently. When we take a look at, first of all, the S&Ps, we took a look at the dollar. And this, of course, right now is our daily chart of the S&Ps. And as you can see, an equally strong move in the market when we look at our daily chart. Now, traders, we're looking at our Standard & Poor's contract, the S&P 500. It is a daily chart, and I do have a couple of Fibonacci areas in there. So for those traders who follow this market or trade this market, what are we expecting from it? As you can see, as this market came up, it made this top, and this top here is 1369. You can see that right here. When we run a Fibonacci retracement, I'm running it from two distinct areas, from this set of bottoms here and from the bottoms that we had at the beginning of 2009. And what you'll find is what I typically look for, as you know, is Fibonacci harmonics. And the one area that you can see, this is that 1226 to 1232. We do have a harmonics here. So if the market does continue to trade lower, I would look for potential support in that area. But we need to see, of course, first how it would react in that area. Traders, we are looking at a daily chart. This is the most active December COMEX silver, and it's also in Japanese average format. It's a Heikin-Ashi chart, and the reason for looking at that today, excuse me, it's a 240-minute chart, I do apologize, but the reason for looking at this chart this morning, as you can see, is we have had really a pretty much a green light all the way up on our shorter term chart. You can see that over these last trading days, meaning yesterday and today, you can see that this market has turned red. And for that reason, we pulled small profits. But my belief is that we want to sideline and see where this market wants to go. Here's what's interesting. We had a scenario yesterday where Greece came out and said that they want to question this referendum and to vote on it. And it brought in the idea of political uncertainty. In other words, everyone thought that it was a done deal in terms of the agreement that they came up with the accord in Brussels, but we now have some uncertainty back into the market. uncertainty, stronger dollar, weaker gold. Very, very interesting. But right now, we do have all signals that gold might in fact trade lower. Where might it trade to? Well, 1694, 1668, those are my areas that I would look for if we see continued aggression in terms of selling. It's these series of tops that we have right up here, and that's right around 1700, 1695. That's where I would expect the market to find some support, but of course we will have to see. And traders, lastly this morning, I really want to take a look at our silver chart. This is cash silver, as I said, currently trading down about $1 at 34.26. Of course, we're in much lower. We're down in this area. But as you can see, we've got this star-like, small-bodied candle, and we have what is forming a three-river evening star variation. It's also forming that variation right at a level, to me, which is a harmonic. So you've got a 50% here, a 61% here, all at right around $35. The fact that it's going to close below that tells me that our real next support level is back down at around just below $33. In other words, $32.90. And because of that, my sentiment is we will put out a recommendation following this broadcast to probably pull profits on silver. I just want to see how it reacts in the afternoon session. We might go ahead and raise stops. We might go ahead and simply pull profits, but there will be something forthcoming for our current silver position. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.